Did you hear about what's supposedly happening at Target? 847 stores. According to recent supply chain reports, that's how many Target locations have reportedly faced major trouble restocking products that contain silver over the past several weeks. I'm not talking about gold jewelry or luxury items. I'm talking about basic silver products, silverware, silver-plated goods, things that have been standard retail inventory for decades. And it seems Target isn't alone. Reports suggest similar restocking challenges are popping up at major retailers all across the country. Supply chains that have run like clockwork for years are suddenly showing signs of strain. Now, I want to be clear here. Retail supply chains are incredibly complex. There can be many reasons for inventory issues, and not everything is a crisis. But when you start to connect the dots, when you look at what's happening in the broader silver market, a concerning pattern starts to take shape. Welcome to the Wealth Radar S. Today, I'm digging into these reports of retail silver shortages, exploring what might be causing them, and discussing what this could potentially mean for the silver market. This is all about analysis and observation, so let's explore it together. Let me start by explaining what's reportedly happening and where this info is coming from. Over the last few months, supply chain analysts and retail industry observers have noted growing difficulties in the silver products segment. This information comes from a few places. First, inventory tracking services that monitor stock levels at big retailers have reportedly flagged unusual out-of-stock patterns for silver-containing products at multiple chains. Second, industry publications covering retail and supply chains have published articles discussing challenges in sourcing these silver-based products. And third, there are anecdotal reports from retail employees and managers describing difficulty getting restocked on certain silver items. That 847 store figure for Target comes from one analyst's estimate. I want to be transparent. This is not an official disclosure from Target. It's an external estimate based on inventory monitoring data. But whether the exact number is 847 or something else, the underlying observation seems valid. Multiple sources are suggesting that restocking silver products is facing real challenges at the retail level. Now, here's where it gets really interesting. Retail silver products, things like silverware, photo frames, and decorative items, make up only a tiny fraction of the total demand for silver. Industrial uses and investment demand are much, much bigger categories. So why would retail products be the ones facing shortages? The answer might be in how silver supply chains work and where retail sits in the pecking order. When the silver supply gets tight and there's more competition for the available metal, some buyers get prioritized over others. Industrial users often have long-term contracts. They've locked in their supply commitments. They are essential customers that refiners and suppliers do not want to lose. Investment product manufacturers, the companies making coins and bars, also tend to have strong relationships with primary suppliers and can compete for available metal. But retail product manufacturers, they're often further down that priority list. They buy smaller quantities, they have less negotiating power, and they're more likely to face cuts when the supply gets tight. If these retail restocking challenges are real, and the evidence suggests they are, it could be the canary in the coal mine, an early warning sign of broader supply stress that hasn't fully shown up yet in the more visible parts of the market. Let me break down the supply dynamics that might be causing this. Based on my analysis of the data, it looks like three major pressure points are all converging on the silver supply at once. Pressure point one is the acceleration of industrial demand. Silver isn't just a precious metal, it's a critical industrial metal with unique properties that make it essential for modern technology. Silver has the highest electrical conductivity of any element. It has antimicrobial properties. It's essential for solar panels, electronics, medical devices, and countless other applications. And that industrial demand is growing rapidly. According to the Silver Institute, which publishes annual supply and demand data, industrial silver demand has shot up significantly over the past 5 years. Solar panel manufacturing alone has gone from using around 70 million ounces a year to potentially over 200 million ounces. Each solar panel contains between 10 and 20 grams of silver for its electrical connections. As solar installation accelerates all over the world, this demand just keeps compounding. Have you ever wondered what electric cars, AI, and 5G all have in common? The surprising answer is silver, and the world's hunger for this metal is creating some serious pressure points in the market. Let's break it down. First, there's the demand explosion. Electric vehicles use significantly more silver than their gas-powered counterparts. The massive data centers powering the AI revolution are packed with silver-intensive components, and the rollout of 5G networks requires silver for everything, from base stations to your new phone. The green energy transition and our technological leap forward are both happening at once, and both are incredibly silver-intensive. This industrial demand is now competing directly with the silver used for investment bars, coins, and even retail goods. While demand is soaring, we hit our second pressure point, a major supply problem. Global silver mine production has been stuck in neutral for about a decade. hovering around 800 to 850 million ounces per year. Why? Well, about 70% of silver is just a byproduct of mining for other metals like copper, lead, and gold. So silver production depends entirely on the profitability of those other metals. On top of that, ore grades are declining. Miners have to process more rock just to get the same amount of silver, which drives up costs. And after years of low silver prices, there was very little investment in finding new mines. The result is a supply struggling to keep up with a world that wants more and more. Now for pressure point number 3, a surge in investment demand. You've probably seen the headlines. Physical silver, like bars and coins, has been flying off the shelves. Even Costco started selling precious metals, and it's been a massive success. When a mainstream giant like Costco starts moving huge volumes of silver, that's a whole new layer of demand that simply didn't exist before. So you have hot industrial demand and hot investment demand all competing for the same limited supply. So how does this all connect? Imagine you're a silver refiner. You have long-term contracts with industrial clients. You have to fill those orders first. Then you have your high-margin investment customers. You definitely want to keep them happy. So who gets left behind when supply gets tight? It's often the retail customers buying smaller, lower-margin items. This is a simplified view, of course, but it helps explain recent reports of some big-box stores having trouble restocking silver-based products. These small shortages might not be the crisis itself, but a symptom of a much bigger issue, an early warning sign of a tightening market. Now, it's important to remember that supply chains are incredibly complex. There could be other reasons for these retail issues, like simple logistics problems. But the broader picture is hard to ignore. According to industry groups like the Silver Institute, the silver market has been in a supply deficit for several years straight. This means total demand has been higher than what's being mined and recycled. How is that possible? We've been filling the gap by draining our above-ground stockpiles. With mine production around 830 million ounces and total demand pushing well over 1 billion ounces, those stockpiles are getting smaller. The question is, how long can that last before the pressure really starts to build? Hey everyone, and welcome back. Let's talk about silver. The numbers tell a fascinating story, and it's one you need to hear. Every year, the world produces about 1 billion ounces of silver. That's from both mining and recycling. But here's the kicker. Annual demand in recent years has been over 1.1 billion ounces. Do the math, and you see a deficit of 100 to 200 million ounces every single year. So where is this extra silver coming from? It's being pulled from existing stockpiles, or what we call above-ground inventories. This leads to the big question. How long can we keep draining these stockpiles before they run dry? Honestly, nobody knows for sure how much silver is really out there. Estimates are all over the place. But one thing is certain. Inventories are not infinite. You can't run a deficit forever. Some analysts believe we're getting dangerously close to a tipping point. Others think we still have plenty of time. But we can look at some hard data. Take the COMEX warehouse inventories, for example. The amount of registered silver there has dropped dramatically over the last few years, falling from over 100 million ounces to, at times, as low as 25 million. Now, COMEX is just one piece of the puzzle, but this visible decline does seem to support the story of an ongoing deficit. So what does this mean for you, the retail buyer? Well, if the global market is running short on silver, it makes perfect sense that you'd see problems at your local coin shop. Think of it like a long supply chain. At the top, you have the big industrial users with their massive contracts. Then you have government mints with their special relationships. And way down at the bottom is the retail market. When supply gets tight and silver starts getting rationed, who do you think feels it first? It's the smaller players, the ones with the least purchasing power. There have been reports of hundreds of stores struggling to restock their silver products. This could be an early warning sign, a canary in the coal mine, signaling a much bigger supply problem that is not yet obvious in the headline prices. Of course, it could also just be a temporary logistical hiccup. Honest analysis means we have to consider both possibilities, but let's look at history because it gives us some valuable clues. Back in 2011, when silver rocketed to nearly $50 an ounce, physical metal became incredibly hard to find. Dealers had long delays, premiums went through the roof, and some stores just stopped selling silver altogether. The retail market felt the squeeze first. Fast forward to 2020. The pandemic shut down mines and refineries. Shipping was a mess. And once again, physical silver became scarce, premiums soared, and retail buyers faced massive delays. Same story. Then in 2021, the social media-driven silver squeeze created a massive spike in demand. Dealers sold out instantly, and the retail supply chain just couldn't keep up. See the pattern? Whenever the silver market tightens, whether from a lack of supply or a surge in demand, the retail sector is the first visible casualty. It's at the end of the line and has the least leverage. So, if the current reports about restocking issues are true, they fit this historical pattern perfectly. It suggests that the retail market is acting as an early indicator of supply stress. Now, whether this will blow up into a full-blown crisis like we saw in the past is anyone's guess, but history tells us we should take these signals from the retail front lines very seriously. They could be the first tremors before a much larger earthquake. Have you noticed silver products are getting harder to find in stores? People are talking about a silver shortage, but is that the full story? Let's break down what could really be happening behind the scenes, and you might be surprised. First off, it could just be a simple mistake. Retail supply chains rely heavily on predicting how much we're going to buy. If retailers underestimated how popular silver would be, they wouldn't have ordered enough. Restocking, even in the best of times, can take weeks or even months. So what looks like a major shortage might just be a forecasting blunder. Another possibility is the industry itself. Over the years, fewer and fewer companies are actually making these silver products. This is called consolidation. So if one of the big manufacturers has a problem, like a factory shutdown or a labor issue, it can cause a ripple effect across many different stores. This would create widespread restocking issues, but it wouldn't mean there's no silver available in the world. Then there are the headaches of modern logistics. Our global supply chains are incredibly complex. A shipping delay on the other side of the world, a traffic jam at a major port, or a shortage of truck drivers can all create bottlenecks. Silver products could simply be stuck in transit, a victim of the same general shipping chaos affecting everything from furniture to electronics. We also have to consider business strategy. Retailers are laser focused on efficiency, and that means keeping less inventory on hand. Holding a lot of stock costs money, so they might have deliberately cut down on their silver product inventory to save cash. This strategy makes them more vulnerable to sudden spikes in demand, leading to empty shelves that are a result of a calculated business decision, not a supply crisis. Finally, retailers are constantly deciding which products to push and which to phase out. If silver products aren't selling as fast or making as much profit as other items, a store might strategically decide to reduce its silver section. What we see as a failure to restock could actually be a deliberate choice to focus on more profitable goods. So any one of these reasons could explain the empty shelves. But here's what makes me think there's more to it. The timing is interesting. These retail issues are popping up right as we're seeing other signs of stress in the broader silver market. Inventories at the major COMEX exchange are dropping. Industrial demand for silver, especially in solar and electronics, is growing, and investment demand remains strong. When you see all these things happening at once, the idea of a real supply squeeze becomes much more believable than just a simple logistics or forecasting problem. But of course, there's always uncertainty, and you should look at the evidence and decide for yourself. Let's imagine for a moment that these retail shortages are the canary in the coal mine, signaling real tightness in the silver supply. What could happen next? First, competition for physical silver could heat up. Industrial users might rush to lock in long-term supply contracts. Government mints could start buying more aggressively. Investors might speed up their purchases to get ahead of everyone else. This creates a feedback loop where buying just leads to more buying, as everyone scrambles to secure their silver before it's gone. Second, we could see premiums expand. The premium is the amount you pay over the on-spot price for a physical coin or bar. We saw this happen in 2020 and 2021 when premiums on silver coins went through the roof. If the supply stress gets worse, you can expect to pay a lot more for physical silver than what the paper market price suggests. This brings up a bigger question about price discovery. If physical silver becomes truly scarce and people are paying huge premiums, while the paper price on exchanges stays relatively stable, which one is the real price? It could cause a lot of debate and confusion in the market. And in a more extreme scenario, we might see rationing. Dealers could start limiting how much you can buy. Industrial users might find their supplies capped. This isn't something I think is right around the corner, but it's a real possibility if the supply situation continues to tighten. Now, I want to be clear. I'm not saying this is all definitely going to happen. I'm simply connecting the dots and exploring the possibilities. I want to be crystal clear from the start. I am not here to tell you that silver prices are about to explode tomorrow. I'm not predicting some kind of imminent financial crisis, and I'm definitely not giving you specific price targets. My purpose today is to share an observation. There are reports circulating from supply chain analysts and inventory monitors that hundreds of Target stores, and maybe other retailers too, are having trouble restocking products that contain silver. If these reports are accurate, they fit into a larger story about a tightening silver supply. Now, this is something worth keeping an eye on. It might escalate into something significant, or it might just be a temporary blip. Any investment decisions you make are entirely your responsibility. I'm here to share observations and context, not to give financial advice. So, for those of you who are interested in monitoring this situation, let's talk about some practical things you can do. First, watch retail availability yourself. You can personally check if silver-containing products are in stock at your local stores. When you're online shopping, are major retailers showing items as available, or are you seeing more and more backorder notices? Your own direct observation is an incredibly valuable data point. Second, monitor the premiums on physical silver. The premium is the amount you pay over the spot price for a silver coin or bar. When these premiums start to get wider, it's often a signal that the physical market is getting tight. Tracking the premiums at major dealers over time can give you a real sense of what's happening on the ground level. Third, follow the industry reports. The Silver Institute, for example, publishes a comprehensive supply and demand report every year. You can also look at the quarterly reports from major mining companies to see what they're saying about their production levels. These primary sources provide the bedrock context for understanding the broader market conditions. Next, it's crucial to consider multiple perspectives. The silver market is full of passionate communities with very different opinions. You have the super bullish analysts, the deeply skeptical analysts, and the industry insiders who see things from a different angle. Listening to a wide range of viewpoints helps you build a more complete and nuanced picture, rather than getting stuck in an echo chamber. And with that, please maintain a healthy dose of skepticism. Not every little supply chain hiccup is the beginning of a crisis. Not every restocking challenge means the entire market is about to fail. Be cautious of overly dramatic claims. The goal here is informed observation, not panic or overreaction. Now, based on their own analysis, some people choose to hold physical precious metals as part of a diversified financial strategy. This is a very personal decision, and it depends entirely on your individual circumstances. If you're even considering this path, you need to do thorough research. Understand the costs, the challenges of storage, and the potential liquidity issues. Make a decision that is right for your unique situation. Again, this isn't a recommendation, it's just an acknowledgement that some of you will draw your own conclusions and want to take action. So let's quickly recap what we've talked about. We have these reports suggesting that retailers are facing difficulties restocking certain silver-based products. I've walked through some possible explanations. On one hand, it could be a sign of genuine supply stress, with industrial use, investment demand, and other factors all competing for a limited amount of metal. This is especially interesting given the broader context of a silver market that has reportedly been in a supply deficit for several years, with visible inventories declining. On the other hand, there are perfectly valid alternative explanations. This could simply be a logistics issue, a problem with forecasting, or a strategic business decision by the retailers themselves. Whether these restocking challenges are an early warning sign of bigger supply problems, or just a temporary logistical snag, remains to be seen. I wanted to present both possibilities because an honest analysis has to acknowledge uncertainty. My goal today wasn't to predict the future or to tell you what to do. It was simply to share these observations, provide some context, and encourage you to think critically. The conclusions you draw are your own, and they should be based on your own research. If you found this balanced analysis valuable, please consider subscribing to the channel. I focus on breaking down market developments using publicly available data and a level-headed perspective. I'd love to hear your thoughts in the comments. Have you noticed any issues with silver product availability in your area? What's your take on these reports? Thanks for watching. Remember, this is educational content, not financial advice. Always do your own research. See you in the next one.